What's going on, everybody? Let's look how Qqqy compares to some of its competitors in the industry and see what might be better for your portfolio going forward. This is Mike, the Tactical Stock Scalper. All right. Well, first off, QYLD is the godfather of these type of funds that follow a NASDAQ. And let's kind of start here at this chart, and they all offer a different dynamic to your investing portfolio. So Qqqy, comparatively to QYLD, is outperforming it with dividend reinvested, as you see there. If you had $10,000 invested, this is what it would look like. That's with dividend reinvested, and it is also outpacing QYLD with without dividends reinvested. I found this chart very fascinating. This is not what I expected from a boss like QYLD. Let's take a look at QYLD for a second and look at a couple other things here. So we are going to go to QYLD here. Okay. QYLD trading at 1770, so really close to the Qqqy price. So if you're looking for something that's similar in price and maybe looking for something that has a long track record, I want to show you this. 11% dividend yield, that's not horrible. It is paid out monthly, but look at this dividend history. I mean, this thing has been around longer than I even knew it was around. This is pretty impressive. It has gone through and weathered some serious market conditions. I mean, for people who say these funds are not viable long term, all you got to do is pull up a chart or pull up a history of QYLD, and that will tell a much different tale. All the dividends, they do fluctuate. As you see here, there's 1 month where it made 9 cents, which obviously is not great. And then there's another month where it made 19 cents and there's another month where it made 20. So as you see, it's fairly consistent in its dividends. Here's the dividend chart here. And I mean, there's always going to be some fluctuations with these type of dividend investments. But what I like about QYLD is we know it can weather storms. And look, I don't even have the full history here. We're back to 2014. This is fantastic news for dividend investors to know that funds like this can really weather storms. You're going to hear a lot about these funds won't last and this and that. That's just obviously not true whatsoever. Let's see how Qqqy compares to a couple others, okay? So let's drop here. You're getting a little tour of my phone. I hope you enjoy that. Okay, so we'll do this. All right, let's look at fepi from Rec Shares. As you see here, Qqqy is underperforming fepi. Now, fepi is a little different animal. It really boasts that it wants to, get some share price appreciation along with some dividends. So if you're looking for maybe a safer investment, look how it's outperforming QY right here with dividends reinvested and without dividends reinvested. It is clearly outperforming QY. Let's go take a look at fepi for a second and kind of look at its dividend history and see what we can pull up here. So we're going to go back here, pull this up here. Now, as you see here, fepi from Rec Shares is quite a bit more expensive, okay? So we know that. Dividend yield 6%, quite a bit less, but as you saw in the chart, it's outperforming QY and QYLD, but that's because it's really focusing on share price and a little bit of dividend. So, the dollar dividends look great, but it's a dollar dividend for a $5 stock there. So 6% yield. It has only had 3 payments, so it is fairly new on the block. It's actually, I think, newer than Qqqy. So That's interesting there as all these new instruments come out. But fepi, if you're looking for something that's going to mimic the Nasdaq and give you some dividends, even though they're not a great amount with the yield percentage, fepi could be your guy. Let's look at JEPQ here for a second and see how QQQY is faring against Morgan Foundation here. Let's go look at here. Let's pull this out, scroll over. Okay, there's JEPQ, and I would say it's probably its closest competitor, and that really shows here in the in this chart. Okay, so as you see here, right, with dividends reinvested, guys, they're equal. There's points where the Morgan fund outperformed, and then there are other periods, as you see with the gray line, where QQQY has outperformed. So with dividends reinvested, these guys are in a dead heat. Without dividends reinvested, JEPQ has the edge, as you see here, and is outperforming without dividends reinvested QQQY. Let's take a look, a little bit deeper dive here into the Morgan fund. Let's pull this up here. Okay. Quite a bit more expensive than QQQY, which means you could buy more QQQY shares, right? So that really depends upon what you want, but I think this is probably QQQY's closest competitor. 9% yield, which is better than REC shares, but not nearly as good as the others. And we do have some dividend history here to look at. You can see the dividends right there, 39 cents, 42 cents. So fairly consistent, but again, with any of these type of funds, you are going to have some inconsistencies. But in saying that, they're still fairly consistent. Look here at the dividend chart, just a little bit all over the place as you would expect. Its dividends continue to come down, much like QQQYs have. Now let's take a look at QQQY with this chart. Here we go, looking at QQQY. The second cheapest in this category that we are looking at. 20% dividend yield, definitely really pushing that here versus its competitors. Quite impressive with that dividend yield. And you can see here the dividends also here with QQQY continue to go down, much like JEPQs, right? So they're competing and they are both following each other. So when it comes to JEPQ versus QQQY, even though one sells puts and one does cover calls, it still looks like they're at a dead heat. So it's really going to be up to your preference there. You know, if you want to trust, the Morgan fund a little bit more, that's definitely, something to think about there. But it just really depends upon what you want. And what I did find interesting, and with QYLD, how it has weathered the storms through years. I mean, it almost makes me want to get in it, even though it is underperforming, as we'll see here again. Even though it's underperforming, QQQY, just the fact that it's been through trials and tribulations, really, it's hard to beat that. I do like fepi, how it is. Sorry about that. You're taking a view of all my pictures there. I do like how fepi is beating QQQY. I want to see if that continues for some time. But again, fepi is a totally different type of animal. Even though you're getting the dividends from fepi, as you see here, just by adding in the share price and really REC shares focusing more on the share price of the Qs gives you a more stable investment. So it really depends upon what you want as an investor. Do you really want the dividends coming in, or do you want a more stable investment? I hope you enjoyed the comparison. Please leave comments down below. Let me know what you think, and if you'd like to see more of these types of videos. I try to be as non-biased as I could with this, even though I have a little favoritism towards QQQY only because I have my money in there. So my emotions are a little bit tied up with that, to be fair. But I tried to be as non-biased as possible with this review, and I hope that came off in a way that I wanted it to. This is Mike, the Tactical Stock Scalper, out.